Last week on the Ghana Stock Exchange was a tale of two stories. While GCB Bank shareholders celebrated a 2.5% gain, ETI investors watched their shares drop over 1%. But here's the question that could make or break your next investment decision. Are these movements telling us something bigger about where these companies are headed? I just spent the weekend diving deep into the financials and recent developments of all 5 companies that moved the most last week. What I found will surprise you, especially about GCB Bank's record-breaking performance and why GOIL's seemingly small gain might actually be the most significant story of the week. If you're holding any of these stocks or thinking about buying them, the next 10 minutes could save you thousands of Cedis or help you spot an opportunity that others are missing. Let's break down exactly what happened, why it happened, and most importantly, what you should do about it. Welcome back, everyone. I'm here with your weekly GSE market analysis, and this week we're diving into the companies that moved the most on the Ghana Stock Exchange. Now, I know some of you might think that weekly movements don't matter much for long-term investing, and usually you'd be right. But sometimes these short-term movements are actually signals of bigger changes happening underneath the surface. That's exactly what we're seeing with some of these companies right now. So let's get into the data and see what the market is really telling us. Let's start with our winners. Leading the pack is GCB Bank, up 9 Cedis 85 pesos, gaining 2.5%. Now, this might not seem huge, but when you understand what's happening behind the scenes at GCB, this movement makes perfect sense. GCB Bank recently recorded a profit before tax of 1,310 million Cedis. Think about that for a moment. In an economy where many businesses struggled, GCB continues to demonstrate strong profitability. But here's what is even more impressive about GCB's performance. They're not just growing profits, they're doing it sustainably. The bank has been focusing on digital transformation and expanding their branch network strategically. Management has committed to maintaining optimal capital levels to support strategic and business objectives to drive long-term success and returns for shareholders. What should investors do about GCB? This looks like a continuation of a strong fundamental story. The banking sector in Ghana is consolidating, and GCB is emerging as one of the clear winners. If you're a long-term investor, this dip followed by recovery could be a good entry point. But remember, banking stocks are sensitive to interest rate changes and economic conditions. Next up is GOIL at 2 Cedis 26 pesos, up 1.35%. Now, GOIL might seem boring compared to tech or banking stocks, but this company is quietly building something interesting. Earnings per share rose to 0.216 Cedis, while the proposed dividend per share remained at 0.056 Cedis. What I find fascinating about GOIL is their consistency. In a volatile energy market, they've managed to maintain steady dividend payments while growing earnings. The company has been investing heavily in expanding their retail network and improving their supply chain efficiency. For investors, GOIL represents something valuable in today's market: stability with modest growth. If you're looking for a dividend-paying stock that's less volatile than banking or telecom, GOIL could fit that role. The energy sector in Ghana is growing as the economy expands, and GOIL is well-positioned to benefit from increased fuel consumption. Finally, we have MTN Ghana at 3 Cedis 89 pesos, up 0.26%. This small gain might seem insignificant, but it's actually quite meaningful when you consider the context. MTN Ghana has recorded over $1 billion in revenue for the year 2024. Driven by strong data and mobile money performance, MTN Ghana is essentially a cash-generating machine. Their mobile money platform, Momo, has become essential infrastructure in Ghana's economy. Even a small percentage gain on such a solid foundation suggests continued investor confidence in their business model. For MTN Ghana, I see this as a stock that belongs in most long-term GSE portfolios. The telecommunications infrastructure they've built gives them a competitive moat that's very difficult for competitors to overcome. Their expansion into fintech through mobile money services provides multiple revenue streams. Now let's look at our losers, starting with ETI at 78 pesos, down 1.27%. ETI, or Ecobank Transnational Incorporated, is interesting because it represents a Pan-African banking play rather than just Ghana exposure. ETI is a Pan-African banking conglomerate with banking operations in 33 African countries. It is the leading independent regional banking group in West Africa and Central Africa. So why the decline? The challenge with ETI is that while they have massive geographic diversification, they're also exposed to economic problems across multiple African countries. When any significant African economy faces challenges, ETI feels the impact. Additionally, as a Pan-African bank, they face currency risk from multiple countries, not just Ghana. However, and this is important, ETI was actually one of the best performers on the Ghana Stock Exchange in 2024, so this recent decline might just be profit-taking after a strong year. What should ETI investors do? If you believe in Africa's long-term growth story and want exposure beyond just Ghana, ETI offers that diversification. But be prepared for more volatility than domestic-focused banks. This recent decline could be a buying opportunity for long-term. Republic Bank Ghana, trading at 1 cedi 9 pesos, dropped 0.91% to the other banks we've discussed, and smaller banks often face different challenges. Smaller banks like RBGH can be more nimble and focused on specific market segments, but they also have less capital to weather economic storms. The slight decline might reflect broader concerns about the banking sector's ability to navigate current economic conditions. For RBGH, investors need to consider whether they want exposure to a smaller, potentially higher growth but higher risk banking play, or if they'd prefer the stability of larger banks like GCB. Here's what these movements tell us about the broader GSE market right now. We're seeing a clear flight to quality. The companies that gained, GCB, GOIL, and MTN, are all market leaders in their respective sectors with strong fundamentals and consistent performance. The companies that declined, ETI and RBGH, aren't necessarily bad investments, but they represent either more complex stories, ETI with its Pan-African exposure, or smaller market positions, RBGH. This suggests that investors are becoming more selective. They're not just buying anything in the market, they're focusing on companies with clear competitive advantages and strong financial performance. The Ghana Stock Exchange wrapped up 2024 with a strong showing, marked by a 56.17% year-to-date increase in the composite index. This context is important because it shows that the overall market had a fantastic year, and now we're seeing some selectivity as investors look for the next opportunities. The other trend I'm noticing is the importance of diversified revenue streams. MTN Ghana benefits from both telecom and fintech revenues. GCB has diversified banking services. GOIL has both retail and commercial fuel distribution. Companies with single revenue streams are facing more pressure. So, what does all this mean for your investment strategy? First, quality is becoming more important than ever. The days of buying any GSE stock and expecting it to rise might be behind us. Investors are now doing more homework and focusing on companies with strong fundamentals. Second, consider building positions in market leaders rather than trying to find the next hidden gem. GCB, MTN Ghana, and GOIL all dominate their respective sectors. Sometimes boring market leadership is more profitable than exciting speculation. Third, think about dividend sustainability. Both GCB and GOIL have track records of consistent dividend payments. In uncertain economic times, dividends provide returns even when stock prices are volatile. Fourth, don't ignore currency and economic exposure. ETI's Pan-African exposure can be a positive or negative depending on broader African economic conditions. Consider how much country-specific versus continental exposure you want in your portfolio. Finally, position sizing matters. Even if you like all 5 of these companies, they shouldn't all be equal weights in your portfolio. Consider making your highest conviction, highest quality plays your largest positions. Here's what I recommend you actually do with this information. If you currently own GCB shares, consider this recent gain as validation of your thesis. But don't get overexcited. The stock has had a strong run, so think about whether you want to add more or just hold your current position. If you don't own GCB but are interested, wait for a better entry point. Banking stocks can be volatile, and there will likely be opportunities to buy at better prices. For GOIL, if you're looking for steady, dividend-paying exposure to Ghana's energy sector, the recent gain doesn't change the fundamental value proposition. This could still be a good long-term holding for income-focused investors. MTN Ghana remains a core holding for most GSE portfolios. The small gain suggests stability, and their business model continues to strengthen. If you don't own shares, consider building a position gradually over time. For ETI, the decline might be a buying opportunity if you want Pan-African banking exposure. But make sure you understand the complexity of their business model and geographic risks. For RBGH, the decline highlights the challenges facing smaller banks. Unless you have a specific thesis about their niche market or growth prospects, there are probably better banking options available. The key takeaway from this week's GSE action is that quality and market leadership are being rewarded while complexity and smaller market positions face headwinds. This trend is likely to continue as investors become more selective. Next week, I'll be watching for any follow-up news from GCB about their capital plans, any developments in the energy sector that might affect GOIL, and whether ETI can stabilize after this week's decline. Remember, weekly movements shouldn't drive your long-term investment decisions, but they can provide insights into market sentiment and highlight companies worth researching further. The Ghana Stock Exchange continues to offer compelling opportunities for investors who do their homework and focus on quality companies with strong competitive positions. If this analysis helped you understand these market movements better, hit that like button and subscribe for more weekly GSE analysis. And let me know in the comments, which of these companies are you most interested in and why? Thanks for watching, and I'll see you next week with another GSE market update.